I gotta turn on my mic. All right. How's it going, everyone? Looks like we got quite a few people in here. We'll give it no more time before we begin. So today we got Alex Options with us today. I don't know if you want to do your self-introduction, Alex.
Hey guys, so for those of you that do not know me from Twitter or stuff, I know Trevin's got a lot of new people now. I've been trading TheSTRAT and using what we're going to talk about today, broadening formations, for 4 years now. And I'm with Stat Trading. I have a partner, Sarah, and two other partners. One's a software engineer, and the other is part-time with us. He works for the military. So that is us. And for those that do know me, uh, today we're not really going to touch on it much, but I did trade ICT and use it alongside Strat and mostly on futures just because it made a bit more sense, which we'll get into that in the near future in this stream. But I guess the reason I switched was because of what we're going to talk about today, just the objectiveness that makes it a little bit easier, especially when trying to trade multiple things at the same time. Uh, ICT makes it a lot easier to if you're focusing on specific indexes, like maybe you trade just ES or just NQ, or you might mix between the two depending on strength or weakness. But when you're trading potentially like 7 to 8 positions a day, it does get a little hectic. At least in the way that I like to trade with scans and things that I know to be true. It just gets a little hard because you have to really dial in and you have to get on all the time frames with ICT and really think about your draw and liquidity and other things. And I like the strat just because I think a little bit less and it makes it a good bit easier on myself.
Wait. So we'll kind of just get into it from there if you want to explain what the strat is, and then because we kind of have to go over that first before we get into broadening formations.
Yeah, of course. So you're gonna notice there's some numbers on my charts. And for those of you that have never heard about the strat, it's pretty simple. So we'll be able to explain about 99% of it in this video. There's some nuanced things when executing, but for the most part, it's just ones, twos, and threes and broadening formations and time frame continuity. So when we're looking at these numbers on the chart, the reason they're numbered that way is because we understand from one candle to the next, there's only three possibilities, which is why it's 1, 2, and 3. And those three possibilities give us the information about the broadening formation with, you can see outside bars, which is a 3. And they give us information on trend, what to trade and what not to trade. And just from the candlesticks. So when we're looking at this, you're going to notice a 1. So a 1 is a candle that did not take the previous candle's high and did not take the previous candle's low. And by definition, that is a consolidation. When a 1 is still open, it's tradable, but you have to keep in mind that it's inside bar, which means things are going to go chop back and forth and back and forth. And your range is going to be a lot smaller compared to something that's a 2. And a 2 is going to be any candle that takes a previous high or low, but it can only take one of those. So you're going to notice if we're looking at CCL right here, you're going to see this is a 2 down. And the reason there's a 2 down is because it took that previous candle's low. And you're going to notice now a 2 up right here. So you're going to see it took this previous candle's high and that made it a 2 up. And when we see a 2, we know that is trending. And the only thing that can happen from a 2 is a 3. And the only way a 2 will form is either it might gap and start as a 2, but more often than not, it'll open as a 1 first and then trigger to go 2. And a 2 by definition is going to be a directional move, which you're going to notice if you get a 2 reversal where you take out the previous candle's low with this candle, you're going to get a directional move lower. In comparison to where you're going to go inside bar, it might have direction, but it'll be a bit more choppy and by definition, a consolidation. And now the more important candle to know about is the 3. And what the 3 is a candle that went to and failed. So when we see something like this, you're going to see it takes out that previous high and then trades below that candle's open. And this will normally happen near the beginning of that candle. And for those that know ICT stuff, you're going to see this as manipulation above that previous candle's high. When we're trading strat, we see a 2. And then the second that goes red, or in this case, black, we know potential 3. And the reason we know that is because in order to form a 3, you have to have a 2 first. And with that 2 being first and the potential 3, since we understand that price takes out both sides of a range, where you can see we made a new high compared to the previous high of this candle. It's a 12-month chart, so it's previous year high. And then we made a new low compared to that previous year candle. So understanding that we take out both sides of a range means we can identify your higher time frame outside bar. And when we're talking about broadening formations, that is exactly what we're doing. And whenever you're drawing one or whenever you see a chart that might have one of these, I know T-Trades does post charts with broadening formations. The thing to note is that it has taken out both sides of the range and created a higher time from outside bar. And that's all it is identifying. So you're going to notice if we're drawing CCL's broadening formation, you can see we have a 2 that goes to the upside. So directional to the upside, but you can notice it didn't do anything. It chopped back and forth. And that's not something we're going to get into today, but we know when that's going to occur more often than not. But you're going to notice we take a 2 to the downside. So directional 2-2 to the downside. And that's going to be a 2-2 reversal. And the reason it's a reversal is because it went up. And then since it took out that previous low, now it's going down. Pretty simple. And what you're going to notice is if you try and identify your higher time frame 3, just using these 3 candles right here, you're going to see we get a higher high compared to this previous candle's high. And we get a higher or a lower low compared to that previous candle's low. So these 2 candles go outside bar to this because we've made the higher high and lower low. And since we're identifying that on a 12-month basis, if I could pull up a 2-year chart, this would be a 3 compared to this candle if you just mush them together. And that's all a broadening formation is showing. And we know if you get any of the reversals that we know about, which we didn't really touch on, but you're going to notice there's only a couple ways price can reverse. So the simplest one, the 1 bar reversal, is going to be just a 3. So you can see the 3 right here, 3 to the upside, that's a reversal. And the reason it is because you did make a new low, but you're now making new highs. And you can see once this next candle opens right here, it's gonna be a lot closer to going 2 up. And you can see we go 3, 2 right there at the open. That's directional. And they reach to what? Take out the other side of the range because we've taken out the lows from over here. And now we make new highs. And you're gonna notice we then go 2 up right here and it goes red right away. And then the 2 down reversal. And then since we get a 1, when people talk about trading continuations, this is what they're trading. You're going to see consolidation and then trend or a 2 to the downside. And it takes out both sides of the range. So you're going to notice if we were drawing out the compound outside bars, these candles all went outside of this. And then from there, all of these candles went outside of these 3 bars, which is what the try is showing. Because if we kind of just move it off to the right, you can see you're just connecting the previous highs and lows. And all you're saying is this stuff is a compound 3 or an outside bar compared to anything left inside that broadening formation. And the reason this is useful is because if you know your reversals and which direction where your time frame continuity is going, which is going to be the next thing we touch on, then we can gauge our magnitude. And this is something that newer traders can have some troubles with. So that's what I'm hoping I can help you guys out with today. So we're going to quickly touch on reversals, and then we're going to touch on time frame continuity and how they all go together. So when we're looking at a chart, let me are you only sharing this window or do you got my
Yeah,
whole screen
no, just
showing?
that window. Or well, your screen.
So like if I move this, you can see
Yeah,
what's
yeah.
behind it, right?
Yep.
Okay. Then I guess I was gonna pull up a diagram, but I think we'll
I
just
mean,
stick
here,
with this.
I'll switch it to my screen. So now it's on my screen, so you can do whatever and switch, and then I'll
All
switch
right,
it back.
just give me 30 seconds, guys.
Yeah. And if you guys have any questions so far, feel free to leave them in chat, and then we can get them answered.
Yeah, and I know we touched on a lot, so if there is questions, we can go over them right away if we need to.
But I mean, while I'm just sitting here, you can see how that relates to just my previous bias video, right? So if we're looking right here, we have a candle that goes up, 2 fails. So then this is the 2-2 reversal back into the range. And then, so just looking at this candle with the next day bias video, we expect this next candle to drop down. Well, that's your 2-2 reversal, triggers down. Where does it go? The other side of the range, right? So you can see that kind of all goes together. That's why I wanted to have Alex on to talk about this. But it looks like he has his diagram back up, so I'll switch it back over to his screen. All right, it's over on your screen.
Alrighty. So when we're talking about reversals, since there's only 3 types of candlesticks that we know can happen, that means there's a finite amount of reversals that can occur at all in the market, which means there's no guesswork. So similarly to his daily bias video, Trevin's daily bias video, we are looking for things that fail one side of the range and give some type of reversal back in. So if you're looking at this, you're going to see it's a big chart, and it actually, this is the whole entire strategy. So if you want this, I could post it to Twitter after, or give you guys a link in the chat or something. But when we're looking at this, since there's a finite amount of reversals, you're going to see we're going to have 2-1-2 bearish reversals where you get a 2 in one direction, an inside bar, and then a 2 in the other direction. And you can see entry and target, which we'll get to that in a second. And you're going to see our 2-2 reversal where you get a 2 to the upside and then a 2 back in. And that can happen bullish or bearish. And then you're going to notice the 3-2-2. And the reason this one's good to know about is because if you have a 3, you know it's a broadening formation and it's taken out both sides of the range. So if we fail the highs of that 3 and go 2-2 back through it, you're going to target the bottom of the try, which will be the bottom of that 3, and vice versa for the bullish reversal. And you're going to notice we also have 3-1-2s, which are going to be very similar to your 2-1-2 over here. And we also have a 1-2-2, which when you're trading ICT, this is the actual setup you're trading more often than not if you're looking for accumulation, manipulation, and distribution. And the reason that is because you get the accumulation, that consolidation, you get the move in one direction and then the 2-2 back the other way. So if you've ever seen the consolidation or the box setup, that's exactly what you're trading. And you're going to notice there's also continuations. You can have the 2-2 bearish continuation, the 3-2 bearish reversal, which this should actually be up here, but or the 2-1-2 bearish continuation where you get the 2 in one direction, a 1, and then the 2 confirming that same direction. And there's a couple other ones, but they're just going to be 2-2s or 2-1-2s for the most part. It should be pretty easy for you guys to recognize this, I would imagine. And if there's questions, please let me know. But now that we know there's a finite amount of ways for prices to reverse, and we can identify the higher time frame outside bar, then it's as simple as trading in the direction of continuity, which will be the next thing we cover, and trading back through a previous range, which is the most important part. Because I know a lot of you guys are futures traders, but when you're trading stocks or something, you're going to notice a lot of people when you break into all-time highs, like, oh, clear blue skies. But the problem with that is when you go into all-time highs, for example, when we go to CCL, when you go into all-time highs, since you're not coming back through previous range, you're not going to be stopping anyone out. And the way it works when you come back through is the broadening formation forms based on fear and greed. So when you get into the lows, everyone wants to short the breakouts lower, but you're going to see it comes and reverses back through. And the reason that happens is because when you get these strong trends, everybody gets short. And once everyone's short, the only thing to do is to stop them out because everyone's short. So the first people to cover or the first people to buy will actually be the people that shorted, right? And that's where you get those big aggressive moves off the lows that sometimes will result in those threes where they sell it down and then buy it right back up. And now that we've covered the reversals and the broadening formation, we want to talk about time frame continuity. So when we're talking about time frame continuity, we're going to SPY. Time frame continuity is using multiple time frames and gauging which direction they're going just based on the color of the candles. So it's pretty simple. And when we're looking at it on a normal basis, we'll be using the month, the week, and the day when we're day trading. And the reason is because every time you get a new monthly open, you're going to get new participants. And the reason that happens is because about 70% of price action or of traded shares or traded anything is done algorithmically. And if it's an algorithm, then they have to tell it a couple things. They have to tell it what to trade. So if we're looking at the SPY, they're telling it to trade SPY, and they have to tell it how to trade it. Are they going to sit on the bid? Are they going to sit on the offer? Or are they going to take the offer and get these big upside candles where they're aggressively taking the offer? Or are they going to hit the bid where you get these big red candles? And since they have to tell it when to do it, every single time frame that opens, you're either going to want to see it confirm what the higher time frames are doing, or reversal to negate the higher time frames, ideally, which we'll get into that. But now that we're looking at the SPY, you'll notice we go to the yearly time frame. So this was actually something we talked about on Twitter right at the beginning of last year. You're going to notice, since we know about potential threes, because a two that goes up and fails back in is trying to take out the other side of the range, you can see the SPY, we slightly higher high than last year, and then we go red right away. So the second that happens, we're instantly thinking potentially this will come back through the range. And you'll notice they go and take out last year's highs. The other side of that previous year's range is the lows. So they go and take out both sides. And then what happens? You get new continuity or a new open. And you'll notice right on the new yearly open, they go from selling to buying, right? And when time frame continuity, or not time frame continuity, when price volatility increases, time frame continuity, you want to go down lower time frames. So we're looking at a year just to give you guys a basis to understand what we're looking at. But now if we go to the monthly time, or actually we'll do quarterly first, quarterly time frame, you're going to notice every time the quarter opens, we're looking for time frame continuity and reversals, because we know if time frame continuity is down, they're coming back through that previous range, and they're more than likely going to go and take out the other side as long as time frame continuity points that way. So you'll see below the yearly open right here at 476.75, we want to short to last year's lows, but we need to confirm that. So we're going to be looking to the smaller time frames, such as the 3 month and the month, to open and continue confirming that. So you'll notice they sold it down and then they bought it back up. They went 3. So once you go 3, you're always a 3, which means this is a broadening formation in and of itself on the lower time frame. Now you get the new quarter open, and this is where we want to see, are they going to buy it back up, try and take out those previous highs of the 3? Or are we going to go red continuity and attempt to take the lows in the direction that yearly candle's going, which since the year is red, we've got all year for those sellers to go after it. So we'd want these quarterlies to confirm that. And you'll notice right on the new quarterly open, they go into a new sell program, as people say. And they definitely are trying to sell that, right? You'll see it. They go all the way to last year's lows. And then you get the new quarterly flip, and you can see they go right back into the range. And on the monthly basis, they come back in. So if we go now, this is a neat little indicator that TFO made up, but it's going to show you multiple time frames. So we're looking at a year and a quarter, but we can do this on a smaller time frame basis. So if we use the day, the week, and the month, and go lower time frames, since time and price, it's all fractal, you're going to notice every time that month is red, they're selling. Every time it's green, they're buying. It's as simple as that. But since we want to know where the directional candles are going, you have to know those higher time frame continuity. So if we go drop down, you're going to see this is on a monthly basis. So in the beginning of September, you can see we go 3. And since we know a 3 is a broadening formation, this is when we actually traded, you're going to want to draw it out. And right on the new weekly continuity, you get the failed 2. So potentially come back through that previous range. And you can see the big old 3. And when that happens, since the new month opened down here, that month goes green to red. And now they're selling for the rest of the month. So you can see the next one goes 3-2 down, continuation. Then we go 2 down, continuation again. And now we're taking out those previous lows over here. And you see the second they take them out, first people to buy are the people that close their shorts. And then they go 2-2. So you get the shooter candle, actual signal, and they take out those lows again. And since we're now taking out those previous year's lows and that magnitude, and that year goes outside, Once you know that outside bar occurs on that higher time frame, you then know if you get reversals and time frame continuity back the other way, they're going to come back through the range. So if we're looking at the SPY here, you're going to notice the monthly continuity. They come in and they start buying this up off the lows. And this is before the flip for the new yearly candle. So they buy it up off the lows, and you'll see we get stuck dead center of this try. And the importance of that is when you don't have continuity up coming back through the try, you get reversals against you. You're no longer trying to take out that pivot because you have to stay twos trending in the direction we're looking for if they're going to take out both sides of the range. So you're going to see they go 3 2 2 2 2 continuation, and then they go 2 2 reversal against. So when that occurs, all of this price action gets stuck inside of that previous range. So not only do we want to identify that higher time frame outside bar, we want to identify when we get stuck, because when you get stuck, that's when this action gets a lot choppier. And one thing, one difference between ICT and Strat is when we are looking to trade, ICT, you guys do pretty fine when it comes to choppy stuff because you're trying to buy below the open and then sell above ideally and look for your liquidity. With the Strat, since we're trying to trade the expansion, we're trying to trade the big candles that form like this. When we get choppy mess in here, we want to stick out of that because we know choppy mess in here. We don't want to be too aggressive because they can take it back and forth and back and forth, and they'll do it for a long time. And just for an example, I believe EA is a good one. You're going to see when you fail to take out either side of the range, you get a choppy mess, right? So you can see on EA, they fail to take those highs. They're too weak to do it. And they're also not taking out these lows. So how are we going to get out of this mess? And when we're looking at that, we see this and we're like, well, we'll just wait for it to take out one side because there's no point in trading this in here. And you can see it's like going nowhere. And that's since COVID 2020. So that is also another thing that is very different between the two strategies. But as far as broadening formations go, you have to have the twos in your direction and continue to confirm, because you'll notice they go 2 up on the month, 2 reversal. We get our new year open right here in January. And since this is all stuck inside, they're not taking anything out because in order to move price, since it aggregates, there's no momentum or anything. You're just looking at who's more aggressive, the buyers or the sellers. When you get stuck like this, we know the reason that it's not doing anything is because they're matching their prices. That no one is taking the offer, no one's doing anything. And if you go into like a quarter, you'll see they go complete doji. And then this thing stays inside right at the end of the quarter. It goes 2. And you'll notice once that 2 happens, this is your 2 reversal on a quarter coming back through our previous yearly try, which we're going to turn off these strat numbers quick. So we can see the previous year's highs and previous year's lows. So you're going to see a 2 reversal back through. You're trying to take out both sides of the range again because you've taken out the lows and you've taken out the highs. So now we get the 2 reversal. So we know they're going higher. And if you looked at that strat cheat sheet, you'll notice your magnitude or your first target is to take that out. And the reason that is our first target is because the second we take that out, these 3 bars go outside bar of this, and you get compound 3, which we would want to know about. And now when we come to the current quarter, you're going to see what they did. If you draw out your previous quarter's highs up here, this is one of our pivot targets. You can see they hit our pivot target during the beginning of the quarter. So they still have time to create wicks and decouple, which it's a concept I don't know if we'll get to today unless we have a lot of questions. But you'll notice they take out our pivot target, and now we have a 2 up. If this goes red, we would want to know about that. And why would we want to know about that? Because on a yearly basis, you're going to notice we're inside bar. And just like we identified on EA, when you go inside bar, no one's in control on those higher time frames. Because if you look at this year, they weren't strong enough to take out last year's highs, and they weren't weak enough to take out last year's lows. And all that means is this is by definition consolidating. It can have a strong bias based on those smaller time frames going 2, but this is still consolidating. And you'll notice if we go to QQQ, or the NASDAQ, you're also inside bar still. And I don't know if I believe IWM also still inside bar. And if you know your 212 continuation, you're going to notice IWM, it's a good bit weaker than the rest. It went 2-2 reversal, and now we're inside bar. So this is not a reversal. This is corrective activity, at least as it sits now. If we go 212 next year, then we're coming back up to try and take some of this stuff out to hit our magnitude. But since we're inside year, the yearly continuity, although it's important to know that you're green, it does not have control. And what that means is since they weren't strong enough to take out either side on the year, yearly participants, the people who are looking at the higher time frame stuff, they're not in control. So if we go down, you'll see on the quarter has been in control this whole way up. It goes 2 2 2 2. Now if we go to the monthly, you'll notice nowhere near taking out that low yet, but bright red. And what does that tell us? Well, that tells us they went from buying to now profit taking. And the first people to short or to exit to sell are always going to be people profit taking. But the question is this strong enough or weak enough actually to go and take out our previous month's low? Because if we're looking at previous month's low, that would give us the 2-2 reversal. And you'll notice if we go down to a weekly chart, you can see it a little better. The broadening formation that we traded back through down here, if we draw that back out, the question is, if we take out that previous month's low, are we going to find any buyers there? Because we do have all the time frames bright green, but since the month's red, we know they're selling it this month. So we'll have to see when they get down here, do buyers show up or do we stay too down? Do we not get any weekly reversals? Because if we don't get any weekly reversals, it's still going. And that's one very, very important thing to note is if it doesn't reverse against you, it is still going. And ICT focuses a lot on trading the range. The strat focuses a lot more on trying to create winning positions and hold them as long as possible. Because we know if this 2-2 reversal here works and it triggers that month down, now we got the rest of the month to go after it. And it's going just into that second week of the month. And then we know if that works, we get potential outside quarter or outside on the 6 month. And that would bring us back into our previous try here. And the importance there is if we're re-entering our broadening formation, if we don't reverse, if we stay too down on the month or go inside in continuations, then we know they're trying to take these lows out again. Since the year is bright green, we'll have to see what they do on a monthly and quarterly basis because we still have another quarter that's going to open in a couple months here. But coming into that second month of the quarter, I would want to definitely know last month's lows. And ICT, you'll notice your fair value gap down here. The importance is if you go into that fair value gap, you see the wicks, that's going to be weekly reversals on the smaller time frame. So we'd want to know about that because if they're still buying it, this is coming down to stop some people out. It's just kind of a game of playing ifs because with that year inside, we don't really know. They could go and take out these highs, or we can stay too down on the month. And that's the beauty in the strat is you don't really have to guess. All you have to do is understand what's going on right now. And if you can understand that, then you're good to go. And I don't know if there's any questions.
Let me take a look real quick.
Someone said simplified video by T.
Yeah, let's see. I think I saw one that was interesting. The how sometimes the strat entry is the liquidity target. So like sometimes when we're targeting previous day low, that's your entry to go short, I think is what they mean.
Yeah, and the reason that works, or the reason you'll notice that they will take out a previous low in reverse is because of time frame continuity. And that's one thing you have to pay attention to because if you don't understand your broadening formation and your continuity and then where your reversals are actually going, you'll kind of get lost in the mess. Because if you drill down to the lower time frames too much, you'll miss out on the fact that this is trending way up just because we take out previous day low or high. So as far as that specific idea there, you have to understand time frame continuity because if we take out a previous day low and all the higher time frames are green, we want to look and see, do they go 2-2 back up on like an hourly time frame? Because if they do that and go back green on the day, you're going to get potential 3 in the direction of continuity. So if we were to look at SPY, this is a weekly candle. This is a great example. So you notice this is gray. And the reason that's gray is because this is a red week against a bright green month. And the reason that's important to know is because if they're buying on a monthly basis, this inside bar down is corrective activity or profit taking. And if you know that, you can see we take out that previous low at the beginning of the week. We drill down, you're going to notice we take out the previous low, and then you get a 2-2 reversal. And the important thing to note here is, does it go 2-2 against you? Because if it does, then they're no longer trying to go back up there. But you'll see they go 2-2 reversal, 2 up continuation, 2 up continuation, and then they make the new high up here. And once they make the new high, you're going to see we get profit taking. So you get a 2-1-2 down. They gap it down, try to go 3, but they ran out of time. And I believe this is going to be FOMC. I could be wrong, but we had some type of news event. And you'll notice this is still corrective activity, all of this. And you'll see they go 2 down, 2 up. They fill our gap, fall back in, and you'll see all of these candles are stuck inside of this. So that's when you get your new broadening information. And you'll notice we get a slightly lower low, so taking out the downside and then going green right away. And then that sets up the potential 2-2 back up. So they go 2-2, 2, 2, 2, 2, 2, 2. First reversal against you, and that's a pretty nice trade.
The one question I see is, can you give an example of a trade using this?
So a good example, this was when we traded on Friday stream. You'll notice here on DKNG. So when indexes are kind of choppy mess, which they were at the beginning of the day Friday, since if we go to SPY, when we're trading, we're looking at all the different indexes and we're trying to gauge our relative strength and weakness based on what's taken out previous month's lows or highs and which direction the whole market's going, which you'll notice is going down. So we want things that are 2-2 reversal on the month already, which quickly you'll see PayPal 2-2 on the month. So we'd want to know about that the rest of the month, because they stay below there, then they're going to try and go. You can see on the 12 month, they're still continuation, which means they're trying to take out all-time lows potentially. So I digress. We'll go back to the SPY. But since
And then
SPY's inside
someone asked
month.
if you could put the numbers on just for this example.
Oh, yeah, I apologize. So since SPY's inside month, we ideally either want to be trading the gappers, because you do get directional. So we get 2-2 weak, and that's good all week. But now next week, since you're inside month, you have to see that go 2 down confirmation if we're going to get to last month's lows. But if you go to the gappers, you get a lot more bias and you'll get a lot bigger moves. So we try to stick on those when the indexes aren't doing too much, which for the people that trade ICT, you look at this and it's like, you go on ES and it's like, oh, tons of points, but we really only trade RTH. So we have to trade the New York session only. So when we're looking at indexes, you'll notice in the afternoon they sold it off, but I was going for the things that were selling right away. So this is when we traded before, and you'll notice from Friday, this is DKNG. So if we identify our higher time from outside bar, just based on our daily chart here, you'll see we made the slightly higher high up here, and then the slight lower low to all these candles, which actually could draw it back here. So now we go slight higher high, slight lower low. You see inside day before earnings, they gap it up. And now with gaps, we know we ideally want to short it back into previous range, because if you gap up, we'd prefer the sell. And if you gap down, we'd prefer the buy. Depending on continuity, there's some differences in there where we won't buy or sell just based on signals going in force with the gaps or whatnot, but that gets a little more advanced. But for example, DKNG, you get gap up. And since we have this previous try, we ideally want to trade back through that previous range. So if we go down to the lower time frames, you're going to notice, so on an hourly basis, you got inside on the hour and the 2-1-2 continuation, or actually reversal, because this was 2 up. And the reason that's 2 up, even though it's red, is because it took out this candle's high. So you get the 2-1-2 reversal, then you get new hour flip, 2 down, continuity still down, and you can see right at the bottom of the hour at 12:30, they go from selling to buying. And once we saw that, if we drill down even more, you'll notice you have a lot of reversals in here. You have the 2 up, 2 down on the 15er. You had this one right here, which was the one we grabbed short. And if you go down here, you'll see they go 2 bars inside. So when we see that, this is a compound inside bar, which means just that you mush them together so you can see the higher time frame inside bar, because we're stuck in this candle here. So they go double inside, and you can see it goes 2-2 reversal up on the new hour, and then it stays 2. We are looking to see, does that 15er go down and try and take out the lows for the rev strat, which the magnitude would be to take this out. But since it didn't reverse back down, we just cut it. And you can see we cut it, and it goes 2-2, slightly lower low, but fails to go anywhere. Then 2-2 back up, confirming the hour, and they take out pivot target, then just shy of this one.
So do you want to show where on the 15-minute you triggered your entry?
So when we're looking at DKNG, the first entry of the day, you can see this is our broadening formation. Once we come back into the try, since we're failing one side of the range, we want reversals back through. And if they don't reverse against us, we'd want to hold. So you're going to notice we go 2 up, 2 down right here. And you can see 2 down, and then 2-2 reversal against. This is where we would lighten our position because it's still bright red on the day, which means they're selling it today. So we still want to be around. But you'll notice new hour flip, they come in at 9:30, buy it back up. And then 9:45, they do that as well. So for the first 30 minutes of the hour, they buy. Then you get the new 30-minute candles, and you get the 2-2 back down. And when we see that, since we know the day is bright red, and we know we're still back in this range because this was too weak to actually get us back up here, they're still selling it. So if you didn't get this entry, you grab this one. And when we take this 15er down, we want to see, does it trigger higher time frames? Because the goal is to make a winning position. So if we go from the 15 to the 30, you're going to notice the 2-2 on the 15er, if that works, that triggers 2-2-30 to the downside. And now that the 2-2-30 goes in force, as long as you don't get a reversal against you, that's still trying to come and take out these lows potentially, because you got continuity on the day with the gapper and potentially take out the bottom of the try. So we take that 15er, add on that 30-minute to the downside, then you go to the hour, and you'll notice you get the 2-1-2 hour to continue adding because it's a winner. And we always want to add to winners, because if they win, this bright red daily candle, or black in this case, has the potential to trigger all the higher time frames. So we'd want to know about that. And you can see they go 2 down on the hour, then they continue 2 down. And once we get this 2-1-2 against that fails to come back in on the new 15-minute candles, this is where we try and get out, which is about like 30.91 if my memory is correct.
Few questions. Someone was saying something about bias and then not trading the yearly candles. So you kind of want to, do you want to explain how you use the yearly candles to go down?
So here's a good example. So the reason the yearly candle is important is because then you can create winning positions that you can hold all year. Because if you know it's in force all year, then you can go after it all year. And if you don't want to trade the yearly candles, that's fine. You don't have to. This works on all time frames. But for example, the reason it's important is because they sold all last year. The second this year opens, goes potential 3, they're buying it, right? So you want to know about that. I don't know anyone who wouldn't. So incredibly important. But you don't have to use the yearlies, because since it works on all time frames, you can then trade the broadening formations on all time frames. So this is a monthly basis, which we normally want to use the month, day, and week, because then you can hold for the whole month if it works. And if this month works on Apple, then we go on the quarter. Where's that quarter trying to go? Take out that, right? And where's like the 6 month potential 3-3? We'd want to know about that, right? So the reason those higher time frames, why we talk about them, is because it tells you where it's going. And if you know that, then you know you can hold. But for the day traders out here, as far as bias goes, with the strat, there is no bias. It's just time frame continuity. And if we go down to the months, we'll go on ES for you guys, since you guys are more used to that. If we go on the month ES, you're going to notice we get the new monthly flip, and they go from buying to selling. So as far as bias goes, the second that month's going red, we'd want to know about that, because new month, new participants. You get a new participation group and algorithmic trading that can potentially send it down, right? So with that new month going red, we know that we want to favor shorts ideally, as long as this isn't 2 up. And you'll notice, since we go 2-2 week, when we get down to the daily time frame, all of this stuff gets stuck inside, and you can see ES, they gap down. right here. So as far as bias, what would we be thinking with this gap down? Well, the first thing is we're bright red on the month. So if they can get back above and into this previous 3, since we know it's a broadening formation, we would want to be trying to trade and take out that month open and change that from red to green, because if we do that, then we're in and now they're buying, right? So if we drill down into the smaller time frames, you're going to see on an hourly basis, this is that previous outside day. They go 3-2 to the upside into it. What do we know about a 3? That's a broadening formation, right? So if we draw out the high and low of that, if we fail one side of that 3 and start coming back through, we would want to try and trade that short because we know we're below the monthly open. And now with the gap down, they gap it down, they try to buy it, but now they go back to selling it because you get a 2-2 reversal. Let me zoom in for you guys. You get a 2-2 reversal where you get the 2 up, 2 down, back into it. And funny enough, Rob, who invented the strat, he passed away recently, but one of his favorite setups to trade was the 3-2-2. He said it's fun to trade and fun to say, or fun to say and fun to trade. I might have to make sure I'm saying that right, but it's pretty funny. And the reason is because it tells you the broadening formation, and then the 2-2 reversal tells you that they're selling right on the flip. So as
Uh,
far as bias, we're not really looking for bias specifically. We're just looking for where are the higher time frame participants trying to take it. Because if we know that, then we can trade with them because they go from last month buying to now the algos want to sell and they sell it right back through. And you'll notice, I'll give you a second, and Trevin, I'll get you in here in a sec. But you'll notice they make the slight higher high, then you get the inside bar, 2 down reversal. They did go and stop them out, so they went 2-2 back up, but that completely failed. There's no way they're going to take that out when you get this shooter, and then they go 2-2 back down again. And you can see if that works, goes 2-2-2-2-2, 2-2 reversal again. So that's your big old trend. I can hear Rob saying it. Yeah, 3-2-2.
so another question I was gonna think is someone said something about so you could use a 10 point stop and catch the whole move up. So kind of the example that came to mind was Apple on Friday, I think. Um, do you want to kind of give an
On the
example of
hour.
like I think yeah when you dropped it down to the lower time frames?
Yeah. So when we're talking about gaps, how ideally on gaps down, we want to buy, and then on gap ups, we want to sell, because normally you'll come back through previous range, and a gap up is a reason for people to take profit, and then vice versa. So with Apple, this is an example of where that wasn't the case. And the reason it wasn't was because we gapped into the higher time frame trigger, which means now if we compare Apple to, like, let's say Qs, you're going to see Qs is still inside on the month, nowhere near taking this out yet, which means this is still technically stuck. So we want to see what they do next week, right? But if we go to Apple, since the Qs are red, we want to have a short bias. We go to Apple and you'll see new month, they go red. If you're not short from there, the second they gap down, take out last month's lows, that's something we want to know about, because now they're taking out last month's lows. They have the potential to come and take out all of these previous pivots, which this is something we haven't really touched on, but this is called a pivot machine gun, where you have 2s to the upside all in the same direction for 5 or more candles is what Sarah's rule is. Uh, but when you have all these pivots, what it tells you is they've been buying it this whole time. Now they're selling. So if we start taking this out, if these people that bought in here want to get out of their position, they'll start selling too. And what that does is it takes liquidity out of the market, and you'll sell even faster because you're coming back through previous range and you're stopping people out. So as far as looking at that, we can then go to the daily. And you'll notice now daily bias, what do we look for? Is it red confirming what the higher time frames are doing? It is. And if we go to our time frame continuity, you're going to see we go from stuck inside bar here, they flip back red, go 1, 2 up, 2 down, the rev strat, and then they take out rev strat magnitude and they stay 2 down. So it's still going. So now we're trending. Now, if we drop it down even further, you'll see this. So we get the 2, 1, 1, and then this is your 2, 1, 2 continuation right here. And you'll see they take it down, and do they reverse is the question, because if they don't reverse, it's still going, right? And we have the month trigger right here. So the month is in force. Sorry about that. Make sure my ringer's off. But since the month is in force, we know they're selling it on the month basis, on the week basis, and now with the 212, this is confirming that they're trying to sell it on a daily basis. So they go 212 down, 2 continuation, 2 continuation, 2 continuation. So when we see something like this, if you got the short from here, yes, you get some overnight risk, so you could close some out if you're one of those people, but it's still going, right? So you don't want to close that. This is something where we'd want to stick around. Hopefully that can did
So
that answer our
yeah, so
question
a
for
few
us?
people are just confused on because you've just focused on the higher time frames. Anyway, you could go to ES on like some lower time frames and explain that. Maybe even that end of day reversal on SPX we watched the other day.
Yeah, so I alerted that one on NQ, so we'll go there. So when we're identifying our range, we want to know, are we coming back through or are we stuck inside? So you'll notice if you're trading ICT, so not saying everyone's looking for this, but here's your order block up here, right? And the way that works is you'll see we start a new broadening formation. And where does it start? You get this 3 right here. So you get the higher high and the lower low. So when that happens, we want to draw that out because now we're creating a new range. And when you get stuck inside, that's when you start the broadening formation over, when you start creating a new one. So you'll see the slightly lower low, if you draw it out to here, and you'll see your slightly higher highs here. And once price takes out new highs, you redraw it because you get more information. You want that information all included in your analysis so you have no bias. So when we're looking at this, you can see they make slightly higher highs and then 312s down. TTO right off the top of the try, and then you get an inside bar again and down. And you'll notice they go 2, 2, 2, take out the low, and then potential 3 right when that goes green, trying to come back through. And you can see they go outside again, and you get the 3, 2, 2 right there to take out the lows again. And when we're looking at this, people see this and they're like, you can only short right here. It's like, no. Once it goes 3, hits the top of the try, if you get a 1 minute, 5 minute reversal anywhere at the top of the try, that's the best entry you can get, right? So you'll notice they go outside again. And then during New York, where the bigger moves normally will occur, if you have your order block up here, you see that for ICT and you have your liquidity sitting right here under your order block. So that's a confirmation of that. But if we're looking at it, all we see is this. We see the try, and you can see 2, 2 back up, 2, 2. They take out the highs of the tries, so we'd want to know about that. Now the new hourly flip, you can see right at the flip, they start selling. So the 2, 2 reversal back down. And then the question is, does it reverse or does it continue? And you'll notice they go 2, 2 into the lows, 2, 1. So they're still going, which I saw someone mention before on NQ saying it's going to gap down. When you get stuff that's still in force trying to come back through, that's when you can get the gap downs. But since over the weekend, you only have the monthly participants or quarterly and yearly in force, we can't really talk about the gaps just because of that. Because yes, you get this big sell on the week and it's a big 3. So what do we know about a 3? We'd want to draw that out, right? Just to make sure. So now if we go to the month, since it's inside overnight or over the weekend, there's no one in force. And what we want is in force. And when we say that, we mean we want below those previous lows, because if that's the case, then they're selling it on the month and they're selling it more aggressively than whoever bought it last month. So they're stopping those people out, which means overnight, anyone that was long last month, they're going to have to sell to close because they're definitely all underwater. They can't not be. So when things are in force overnight, you want those higher time frames. And on like if you're swing trading through the week, you'd want the week in force.
Okay. Let's see. How do you know it's beginning of a broadening formation? So do you just want to mention that one more time, kind of when you get consolidation?
So when you get stuck inside, so if we're looking at the SPY, or that we'll actually look at NQ here, you can see this 2 up reversal takes out this previous high, so higher high to that. And then you get the 2, 2 back down right here. So now that we go and take out the lows, you can see the 2, 2 back into this previous range. Now notice this. See how all of this stuff fails to take out either this low or this high? What that means is you're going to start the new broadening formation. So if we zoom back into this, when you get stuck inside, this is, first of all, what we don't want to trade. We want to ideally stick out of that. But this will start a new try because you're going to want to take out the highs and take out the lows, and it'll start small and get bigger. You can see this candle traded all the way down, all the way back up, and then all the way back down again, slightly lower low, and then all the way back up. So we call it a chop shop. And if we now drop down to our smaller time frames here, you'll notice, so you go 2-2 back into the range, 3-2-2 right here. When it goes 2-2 against, if they're not taking out this low, this is right here. This is when the try starts. And the reason it's right here is because you've made slightly higher high to this previous high here. And then when this 2-2 takes out this previous candle low, these two bars go outside of this bar. And you'll notice then you get the new flip, new weekly participants. They buy it all the way back up to the highs. So you get the new try and you draw it out. And you'll notice again, so they get stuck inside. So this candle stuck inside all these three. It went 2 down. Then you get a new 3. So what does that do? Creates a new broadening formation because all this stuff is stuck inside of that. So now if we drill down even more, go down to a daily, you'll notice on a daily basis, they went 2-2s down here. They did stop some people out, and then you get the potential 3 that comes all the way back through this try, right? With continuity, with the new week in the direction of the month. 2 up, 2 up, 2 up, 2 down. So back in the previous range, but the question is, does it reverse or not? Because if it reverses, now you're going to get stuck inside here if they can't go and take out this high, right? So now if we're looking at it, 2 down, 2 down, 2 up, right? And that fails to do anything. They go doji. So the second we start seeing stuff like that, we know that they're getting stuck because they haven't taken this out. They haven't taken that out. So you'll see the 2-2 reversal. If you paid attention to our chart here, if you get a 2-2 bearish reversal, your target is that previous candle's low right here. So now if we go to NQ, you'll see small range, which is why we don't want to trade it. So they go 2-2 down, then you get 2 down, slightly lower low to that, and then potential 3 the second that goes green. And where's that going to try and go then? Since we started a new broadening formation getting stuck inside of all this, we're not looking for that high. We're looking for the other side of your range here. Because if we really zoom in now, you're going to see the second you get a penny below this low here, these 3 candles go outside of this candle. That's a broadening formation forming. This is your higher time frame 3. And the reason we draw it is because your broker is not going to show you it. This could be on some wonky time frame like a 2.5-day chart or something. We don't know. But since we can draw it, we do know it to be true. So you can see they come back through 3, 2 to the upside continuation, right into the top of your broadening formation. And once you get to the highs of it, the question is, do they reverse or do they continue? And if they continue, once you get out of this broadening formation, you know they're going to try and expand to take out liquidity because that's what they do. So you'll notice they go 2 up, tries to get out of it, fails. The second that goes red, what are we looking for? Either potential 3 or it runs out of time and goes 2-2, which you'll see. They gap it down, fail to come back into this previous range, stay 2 down, and then stay 2 down again. So without a reversal against you, they go to the other side of your broadening formation. And then when that happens, you redraw it. So now these 3 bars are outside of everything to the left within this try. So you can see as time progresses, this range gets bigger, which is why we don't want to trade this choppy mess. We want to wait for the tries to get bigger. And since we can now draw them based on our magnitudes and where you get your compound 3s, you can identify your range. So once it gets bigger, here's your 2-2 right here on the daily time frame. You can see they take out all of it. So these 2 bars right here go outside of everything to the left, which means you'd redraw it. And since it took out this previous high here, we'd redraw it to there as well. And you'll notice they go 2 up doji. So if you know your daily bias video, this would be where you look for the potential move back in since they closed below this high, right? Then you get the 2 up to reversal back in. So if you're an ICT person, potentially you're looking at these order blocks. The reason I have decided that I'm not going to be using them is because they can get ran through and I don't like being wrong in that sense. I would rather just get stopped out and call it quits for the short and just take it right back the other way than not potentially take this back to the other side of the range. And that's one thing I realized is if I throw them all together with the strat and ICT, I can kind of confuse myself if I'm not very careful, which just isn't really good in trading. So that's why I decided to go back and kind of stick more to the strat. But besides that, you'll notice the 2-2 back down. So the question is, does that continue or reverse, right? And on a daily basis, if we're taking the 2-2 down, we know we want to be on the hour. And you'll see this occurred on news. So when news happens, notice what you get. You get the 3. And the reason that's important to know, especially for all you people that trade futures, you know what this is, right? The reason that's important to know is because once you get this 3, this is another broadening formation, which it's going to look really weird. Would draw it more like like this. But all that's important is it made a new high and it made a new low. And then what's important after that is, does it continue or does it reverse? And you'll see they go 3, 1, 2 to the upside. So does it continue or reverse? They go 2 up in red. They do come back in, but right away they buy it right back up, 2, 2 again. So if you get stopped out of this one, you just take that one right there. They go 2, 2, and we'll see what happens. And you can see this all gets choppy mess stuck inside. So this is smaller time frame broadening formation forming, which if you're looking at fair value gaps, potentially this will kind of expand this range and then finally go and take out the highs. And what we'll be looking for, let's see, I kind of spoiled it. What we'd be looking for is, do we take out that previous day high or do we not? Because we know it's 2-2 down, closer to taking out the highs, but it hasn't reversed yet. And you can see inside bar, so kind of spoiled it, but we'll get back down to the hour. And you'll see the slightly higher high form in here. Now we go inside, so again, try and slight lower low. You can see the inside and down. Still 1. And you can notice all of these candles stuck inside of this, which is where we don't want to be trading. And I believe this goes into the overnight session. So we'd want to skip into the news. Monday, this is midnight. And you'll notice when we're looking at this, all of these candles here get stuck inside of this, which is why it's incredibly important that things don't reverse. And when they don't, good things happen. So you'll see choppy mess in here, which means no trades for us, because how are you going to take out either side of this broadening formation? Because if we take out the highs, we know it's daily 2-2 reversal. And if we take out the lows, we know it's continuation down. So right now, doing nothing. You can see they did put a 3-2 in, so they're now broadening formation to expansion, so it's a continuation. And this is coming into like 7 a.m. now. And you'll notice another 3-2 to the downside, and they take out some liquidity. Still completely stuck in here. So this isn't something I would want to be trading at all. And now the question is, you can see they did 3-2, stay taking out the lows. Do we take out our lows, come back through the range, or do we reverse? And if we go to the daily, make it a lot easier. You can see we go 1 on the day and then 2 down, right? So if you're trading that order block, you might have gotten some wins here, but 1, 2 down, they're still coming down, and you'll see they do hit those previous lows, but all these candles still stuck inside of here. So we need to see it stay continuation down if we're going to get those lows. And if we look at it, this is Tuesday. So 1, 2 down Tuesday. Let's see what they do. They take out the previous lows. So we got the 2-2, 2, 1. So choppy mess. We don't want to be trading that. And then you trade the 2 because that's directional, right? 2, 2 takes out the slight lower low. Does it reverse? And this is just like Trevin's daily bias video, but instead we're just using the broadening formations. And now if we come through, get the 2-2, does it stay in force? If we go to the week, you can see 3. So here's your new broadening formation after getting stuck inside of all that. And then 2 down. Does it try and come back through this try? And since we know it's a 3 back here, any reversals off these lows, we'd want to definitely know about. And you can see they go 2 up, fall back in. So closer to 2-2 reversal, but does it reverse or do we get a potential 3 to try and come back through? They go 1, so they're still going up. 2 to the upside, there's your continuation. Boom, right into the other side of your broadening formation. And you'll notice now, since we've now taken out both sides of the range, we have to see, do they reverse, try and take out these lows again, or are we going to chop around in here and continue? Because now, since we're not stuck inside of all of this, and we've traded back through the range, stops anyone out who's trying to long into these highs. And if we zoom out, we have this bigger try up here. So anytime we're out of this one, it's expansion to try and take out these pivot targets up here. So does it reverse or does it continue? So you can see slight lower low on the 2. They don't go anywhere with it. So 2-2 reversal back up. If you know your strat magnitudes, you're going to see a 2-2 bullish reversal. The target would be to take out this high. So do we get that is the question. We do not. So they take out the lows of the try again. And still important to know because bottom of the try, right? We're still stuck in here. So what do they do with that? They go to continuation. So they're still selling into the lows. Two continuations, still selling into lows. And you can see you're expanding outside of this try. So now if we get out and stay out of that, they're potentially going to try and take out some of these guys. We get the 2 down, goes back in. So potential hammer reversal. 2-2 back up. So do they stay in force or not? If we go to the week, now on a weekly basis, big old 3. So you can see they did the broadening formation how many times in here? Probably 6 different times. So 6 different trades up and down. 3 back down here. So the question is, since we know this is a higher time frame 3, do we get back above that previous low? Because if we fail one side, we're trying to take out the other side up here, right? And you can see they fail to come back in the range. They go 2-2 back down, direction of continuity. And now we've stopped out these people. So where's the next 2? It's closer to down, but looks like it'll open inside. There's your inside bar. 3, so you can see these 2 bars completely stuck inside of that. How are we getting out of there? 3-2 down. So you get directional after the 3. Now 3-2-2, they're trying to potentially take this out. But if we go to a week now, look at your week. So if that week goes green, we would definitely want to know about that. If we go to the month basis, you can see just at last month's lows. So are they going to try and stop people out and come back through or not? And if this 3-2 can stay 2, then we'd want to know about that. So you can see the 1. So this is now an actionable setup, potential 2-1-2 reversal. And what that reversal would do would change weekly continuity. So definitely would want to know about that. And you'll see on the week, where does your try now form? You can see we get the slightly higher highs and then slightly lower lows back here. So if we zoom into this week, did not quite make this lower low. So that's going to be important to know because if we don't, we need to get back into this one. And the reason we need to do that is because if we get chop shop in here, then you're really getting killed because they're doing nothing. They haven't taken out the lows. They've only taken out the highs. So what are they going to do? Let's go to the day. 3. So if we go, you can see the gap up. That's why we don't want to buy gap ups. Go to the week. Looks like we opened a brand new week. So this one went 2 down. Now does it go green? If we go now to the month, kind of spoiled it, but I was going to say, here's your new yearly open, and you can see 2 down in green right here. So if we go back to the day right here, weekly, my bad. This is the new yearly open. So that's something we want to know about. And we're still at the bottom of the try. And now if we zoom in, what can we notice? They have made the slightly lower low. So if we zoom back out, or actually, did they go equal? They might have not. So they actually went equal lows. And the thing with that is, since we know this 3 back here is still a 3, we know we're chopping around in here. Since we went equal lows, what that means is from this high up here to this low, these candles are stuck inside of that. So as long as we can stay 2, get back into this 3, we'd want to know about it. But now that you're making equal lows, we definitely need to see those reversals back up for us. So if we go to the weekly basis, since we're chopping around the week, do we go 2-2 or potential 3s? So you can see we go 2-2 on the week. And now if we go to the month, you're going to see monthly continuity after last month's red continuity goes green. So 2 down takes out last month's lows, and green, definitely want to know about that because you know potential 3s exist. And you'll see it just ran out of time. So sadly, we got the spoiler up here, but just ran out of time, which means 2-2 reversal next month would be something we'd want to know about because if we go 2-2, we're trying to come back through this try still after choppy mess in here, which more than likely going to be still choppy. Let's see the month. We'll just kind of play it through here. Let me get it on 10x. So you can see it goes 2-2, but since this is still all stuck inside, you have to see it stay 2. And you'll notice they stop them out, go 3. And then once we start taking out this high, you'll see the trend actually starts forming and we go and reach for actual pivot targets, which on NQ is what we're coming off of right now. So that's why we don't want to be trading inside this stuff, because you get back and forth based on just whatever those participants want to do. And you'll notice you don't start trending until you actually get the quarter up, because we go to the month here, you'll see they'll take the quarter up, then they stop them out, potential 3 right there. So if we go to the quarter, once it goes 2 up on the quarter, since it's stronger than the previous quarter, 2-2 reversal, on a monthly basis, if they go buying it back above that previous quarter high, potential 3, then 2 down in green right there, they're trying to take that out. And what would that do? That would confirm the quarter. And things that confirm the higher time frames are the things we'd want to know about. So we now drop it down. You'll see this is where 3, you can see the try, and then the 2 expansion. And then again, gets stuck inside 3, 2 expansion, 2, 2, 2 on the smaller time frame weekly.
I'm just going to go over, we're almost about with our time, so I'm just going to go over real quick kind of how I use it, and then we'll answer any final questions and then hop off if that works.
Sounds good. Go over
Sweet.
it.
So you guys heard his explanation, and I'm just going to kind of give how I use it. Is I essentially just look for a range, right? That's the easiest way for me to do it, because then we have our sell side liquidity and buy side liquidity. And then what I look for is I look for a take of that, right? That's kind of what we're looking for with ICT. So Alex would be looking from this high and he'll draw it backwards, right? That's how you get your broadening formation back that direction. I like to draw them this way because it makes a little more sense to me. But if we fail this side of the range and fall back in, where are we likely to go to reach this side of the range, right? Because that makes our triangle, right? Or broadening formation. So then what I do is then I can go to a lower time frame here and search for an entry to the other side of the range, right? And then we get into our New York Open. What happens here is we sweep this side of the range, right? So then I can look for an entry down there on the lower time frames. I draw out this broadening formation. If we're not going to get stuck inside of here, we're likely to reach for the other side of the range. We reach up there. We fail this side of the range, or the broadening formation, can look for a trade back into the range, or the other side. Now we fail right here. And then as we get more info, we can expand this out. And if we're gonna chop, we're just gonna get stuck inside here, right? And then essentially what we generally do with ICT wise is just marking out our buy side and sell side, right? But with broadening formations, I can use it to kind of project some targets out, right? So then if we let this play, you can see we hit the other side of the range. If we're gonna fail here again, where are we likely to go? The other side of the range, right? And so then what I do is, what is it? What's up?
I was gonna say, one thing I would like you to do, if zoom out just a little bit, like more, like go to like a 15. You'll see it.
Zoom.
So what you'll see is if you look left, notice how all of that price action is stuck to everything to the left of it.
Yeah.
And that's when you want to start looking for those tries to come back through and start getting bigger and bigger.
Yeah.
Because eventually, once it gets big enough, it'll take out that low on the left down there where you have your low resistance liquidity. Or you'll end up taking the highs to change the direction of those higher time frames.
So it can also be used, like you said, if we get below this try and we can't get back into the range, we're likely to go lower. So we'll see, right? So that's where we are right now. But another good one that we can look at just on the daily here is, was I on ES? I saw this earlier. Oh no, yeah. Right? So you can see right here, we take this low. This fails this side of the range, so you can draw that out. It's likely to reach for the other side, but can't displace over this highs, right? So then it's likely to reach the other side of the range. So far, we can't get back inside this range, right? So that could show further downside. So that's kind of how I use it in my trading. But let's see if there's any questions.
I see two. So there was so every time frame should be out of a 1 to take a trade. I can answer that one in like a minute.
Yeah, here, let me switch to your screen. All right.
And then the one below that is a day trade scalping strategy where the hour is the highest time frame. If you're trying to do something like that, that's where the gappers makes the most sense, but we'll talk about that in a sec. So every time frame should be out of a one to take a trade. Ideally, yes, because we know by definition the market has to trade in the direction of the most twos and twos going three. It can't not. And what that means is on the higher time frames, if the month is two up, the week is two up, the day is two up, they're definitely trading higher. By definition, they are. Obviously, you can get daily reversals that can change weekly continuity or monthly continuity, which we know about. But once the month goes bright green or bright red and you have the two ups or two downs trading in your favor, you know you have that whole time frame to go after it. So when we're talking about trading the twos in all time frames, the best one to trade is going to be the two up year, and then you get all year because you go to something like Tesla, you're going to see they get stuck inside, right? So we know new broadening formation is going to form. Then you get outside bar, right? So the question is, do we go 3-2 or do we go three and then back through? And you'll see something like Tesla. This is a good example because it rallied a lot. But once it goes 3-2 to the upside on the year, every other time frame, as long as it's two up, they're trying to make this yearly candle bigger. And with the strat, we're really trying to trade from wherever that open is all the way to wherever that close is. All the little wicks and stuff in between, we're not really that interested in. So like going down to a smaller time frame, if it goes like a month, you're gonna notice once that year goes in force, you get 2-2 back on the month. So the question is, does that reverse or continue? And since we know the year's up, it's more than likely to continue. And once you get the one, you can see chop shop, which is why you want the twos on all time frames, because you get stuck day trading in that, you're going to get killed. Now, the two back up on the month, you can see they trend all month in the direction of the year. Now we go into all-time highs, but since the 3-2 year is in force all year, how are they going to go and negate yearly continuity or go back below yearly open? They won't be able to because there's no signals in here to actually do that. And you'll see they go 2 still, one still. So anyone that's shorted in this, it's rolling over. It hasn't even reversed yet. And you can see the one consolidation. Anyone trading this, they get killed because it's a one. And then you get the twos again, confirming all the higher time frames. And then you can see once this all gets stuck in here, you're getting killed until it actually goes and takes out either side of that previous range, which you'll see on Tesla. We made the new highs to our previous highs over here. And remember, all this inside bar stuck starts a new try. So they make new highs and then they go and take them out. So you can see the new lows as well. So all of this went outside of that. Then two twos back up, they get stuck, and then the two twos right here. But so it's important to have those twos on all time frames. What we do is we look to trade the lower time frames to trigger twos on the higher time frames. And the reason we do that is because if we go on Tesla, just for example here, if this is our monthly 212 and we know everyone's buying on all the higher time frames, we get onto a week. So you can see 2-2 on the week goes up, goes red, but doesn't reverse. So I don't know if there's a news or something in here. We'll have to see. Yeah, so you can see. So we go two up red now, closer to two down, but on the daily basis, you can see they take out these highs. So when we're looking at that on an hourly basis, there has to be reversals in here to go and take out those highs, right? So what we'd be looking to do is ideally take trades that trigger the two up day, because now we have all day for this thing to try and trend. And if it can trend, they're taking the month up. So you got all month to go after it after that month goes in force. And you'll see you get a two to the upside, goes inside one, goes to continuation, and it keeps going because that month is still in force and it's bright green on the month, quarter, year time frames, which means they're buying it on all time frames right now. Every single day, this is green. And you can see something one like this, there's no way that's going to go and change your yearly continuity or your monthly continuity. So if we zoom in, you can see, I believe it's in November. November opened right here. You can notice they go from selling, new month, they buy it right back up. So buyers step in there. You can see they stop them out because you're stuck inside all that. And then you come back through the try with some earnings. So didn't get to trade that, but comes back through the try. So we want to ideally have the twos on all time frames, but we're trading to trigger those to happen. And now for the second question, if we have enough time.
Yeah, go for it.
Alrighty. So someone said, can you show a day trading scalping strategy where the hourly is the highest time frame using the strat? So If you're trying to scalp and day trade on really low time frame stuff, the reason we want to stick to those higher ones is because volatility changes what time frames you're going to use for your time frame continuity. Because if we go to DKNG, you're going to notice we go to a daily candle, each daily candle in here is like a percent, right? Now this one is a 12%, right? And since it's earnings, we're expecting high volatility. The question is do we go bright red or bright green and give us our bias? So if you're trying to scalp using the strat, you want to stick to earnings or things that are highly volatile. Like if you go to more earnings names, there's like an example, ALEC. You can see it right off the open. Anytime this hour is green, you're going to want to take those lower time frames up, which I'll show you. So for example, we'll just use this one. This is going to be an example of gapping to take the higher time frame trigger. So you can see on a quarterly basis, you get the 3, slight lower low, closes back in. 2-2 reversal, 3-2-2 back up, trying to take this out, 986. And this is one coming off the bottom of the try. So that's why we've got it on our list. I got some shares. But so now if we go to the quarter, and I'm sorry, I'm guessing you want something where you don't have to look at the higher time frames, but you have to because they tell you where it's going, right? But now scalping on an hourly basis. Once this gets all stuck in here, there's no scalps to be had, at least in my opinion. I wouldn't touch it. So anytime this hour is 2, that's when you can start scalping, because if it's a 1, it's doing nothing, right? So now if that hour is 1 or 2, I mean, as far as scalping goes, this one's not the best example because it's kind of low liquidity. We'll go to DKNG instead, which we already explained why we are looking at that one. So should make sense for you guys. But this indicator is actually very, very nifty. You'll notice it'll actually do it all for us. So if we go to the hourly time frame, this is gonna be our higher time frame. So that's all we need to turn down. And now you have to choose what your entry time frame is going to be. So if you're looking at a 15-minute entry time frame, then you only get a trade every 15 minutes potentially, right? So the lower you go, the more noise you can get, and that's why you want volatility higher. So in this example, we'll just use like a 3-minute or something. And you'll notice this. So during the beginning of the day, you get decoupling, which is when you open the first hour of the day, the hour and day open are the same, right? So that means we only know what the daily participants are doing. And DKNG with the full time frame continuity we're looking at, they're buying. So you can see the first little bit of the day, they try and buy. Now you can see as time frames decouple, once you get the second fiver of the day, because the first fiver of the day has the same open as the daily candle, you now get 5-minute participants stepping in, and then to the 15, the 30, and the 60. So if you're trying to scalp, you can see since it's a gap up, we know not to be buyers up here. And if you don't know not to be a buyer, you know not to be long when it goes 2-2 reversal against you, right? This is on a 1 minute. We'll go to the 3. So now using hourly continuity and reversals, this will highlight them for you. So you can see anything gray, that's going to be against the hourly continuity. And what that means, or it's going to be in conflict. But what that means is you can see the hour goes red. This goes back up, but since the hour is still red, we know this is more than likely not going to negate the hour. And the reason that is because a T2 on the 3-minute right here, if it hits its target, that does not change the hourly continuity because the hour is going to be opening right up here at the daily open, right? So you'll notice they go 3 or 2 down, 2 up. Once they hit your magnitude here, that's when you want to know about it, because what do we know? These 3 bars go outside of that, right? And when that happens, we know we have a broadening formation. So if we reverse back in, we know to short it. So if you wanted to get on a 1er in here, that's where you can do it. But if we're going off a 3-minute basis, we get a 2 up, 2 down reversal to the downside. And you'll see 2, 2, 2 down in green. So 2-2 reversal against. Since your entry is only right here, this is when you partial. And then if it reverses again back down, you know it's still selling, right? So you take the 2-2 again. So they go 2 up. They're not strong enough to take that out, so they're still selling it pretty aggressively, right? 2 up in red. So the second that goes red, we know potential 3. And now you get the 2-2 back down, looking to do what? Go outside bar of your previous range. So you can see these 2 bars go outside of that, and that'll give you another broadening formation. So you get the 2-2, takes out low a day. Does it continue a reverse? You get 2 down, 2 down, 2 down, 3, 1 bar reversal against you. When you see a 3 against you, since a 3 is a broadening formation, we want to give it a little time. See, do they come back through that 3? Because this can be a TTO. But you'll notice they go 3-2 up. So they're still going. They're buying it again. And now new hourly continuity. So if you're a scalper, day trader, the second that hour goes green, every hour is like a new day when you're trading these gappers. So the second that hour goes green, you don't want to be short. You ideally would rather be long. And you're gonna notice they go 2, 2, 2, 2. And what do they take out? You're gonna see our previous compound outside bar here. If we go all the way down, you're gonna notice all the way down here, and then you get the reversal. So when it reverses down here, once it has continuity, they're trying to take that out. You're gonna see 3, 2 up, continuation with continuity. So now they're trying to go 3, 3 after this stuff. So your try turns into this. The second you get a penny above these highs over here. So it'd actually be the second it goes like that, I believe. Or no, those equal highs. So this goes outside of all of that stuff with hourly continuity in your favor. And you'll notice you get the 2 down against you, but hour's still green. You get the 1, the 2 up, so they're still buying 2, 2, 2. 2 down hammer. Now, new hour, you can see the 3 comes back in against you, and this is where the sellers are coming back in because the day is bright red. And this is where we got our 15-minute entry short. And you'll see 15-minute trigger was right here, but the magnitude of that would change that hourly continuity and trigger the 30s down. So if you're looking at it, the 312 triggers the 15er, and then it goes 2, 2, 1, 2 down, 2 down, 2 down. New hourly flip. So they stop them out with the new hour. 3, 2 down, 2 down, 2 down. Stop them out again. Your entry's way up here, so you'd want to partial some, but you'd want to still hold because it's bright red on the hour, right? 2 up against you, 2 back down, so you get back in with more. Inside bar, get back in with more. If that goes 2 and 2, there's your 2, 2. Slight move against you, so that's where you want to start partialing a little bit of that and make sure you get your stops moved as quick as possible because you don't want to let green go red. And then you get the 2 back down, the 1, and you'll notice they keep moving it down. This all gets stuck inside, so when you go inside, you start a new broadening formation. You'll see a slightly higher high here, slightly lower lows here. So all of this stuck inside of that stuff. Here's your new try. Then you get the 2 and 2 off the highs. 2, 2, 2, chop shop again, where they get stuck, and then they finally get into those lows. And you can see coming into the latter half of the day at 12:30, they go from selling to now buying with the new hourly continuity. Buy it right back up.
Sweet. I think we'll probably call it there. If you guys have any questions, you can come into the Discord and ask them there, and we'll get them answered. Otherwise, thanks for coming on, and yeah, that's kind of it, unless you have any closing thoughts.
A couple people just asked about the 1, 2s, and 3s, the ones that joined a little later.
Yeah.
What I'll do is I'll give you guys this link. I don't know if could you throw that in the description for them?
Yeah, can you send it to me on Discord? Or?
Yep.
All right.
I don't know if it'll let you post the Discord meta.
I'll
Might be wrong. I don't
just
know.
post it on Twitter and then we'll link it or something.
All right.
But
yeah, and
or I'll
some
post it
people
in
are
my
saying like
Discord.
this isn't ICT. That's kind of the point. We're talking about some different stuff. I know it's not everyone's taste, but you know, time frame continuity and magnitudes, I like them. So might as well
Yeah.
talk about them.
I mean, also, I'll just go back to my screen. It might not be ICT, but you can use it. It all goes together. Like, the more you learn about both strategies, it just goes together, right? So, like,
So
when we take a previous low and then we reverse into the, reverse, then we're likely to see the other side of the range, right? And most ICT people just see that as we took sell side and we're reaching for buy side, but there's other ways to look at it as well. So, but yeah. But if you guys have any questions, put the chart on YouTube. I mean, I can open in my browser quick. There. If you guys want to look at that, it'll just be on the screen. But I think I'll go ahead and end it there. Went a little bit over what we were planning anyways. So, but I'll see you guys later. Hope you guys have a great rest of your day, and peace.
Adios, guys.